This
I
conference will
have
now
o-
be recorded.
I have overall 9+ years of experience in Duck Creek, and I have been working on modules like policy and billing, Duck Creek policy and billing, and we will start. So before we start with Duck Creek, so I just wanted to know if everybody is having some knowledge about insurance. Is there anyone who has no knowledge of insurance? Please let me know.
Yeah, I don't have any knowledge on insurance. The thing is, I'm a database
Okay,
administrator.
okay. Anybody else?
Same here. I'm Pradeep.
Okay, okay. And what about others? Uh, I believe Stella said that she does not have any experience. She's starting after 10 years. So,
Yeah.
is it same for you also?
I heard about some, I saw some classes in the YouTube, but I'm okay, familiar,
Okay.
little bit familiar with that.
Insurance, okay.
Yeah.
And Jagbir, I think you will be well versed in this since you are already having a very good amount of experience in insurance.
Yes, I do have.
Okay. Okay. So, today I was planning to give a session on insurance itself because that was the basic idea that most of them will not be well acquainted with the terms that we generally use. So is it fine if I proceed with that?
Yes.
Okay. All
Yeah,
right.
a refresher
So
will be
we'll
good.
start with,
Yeah.
yeah, thank you. Thanks for the confirmation. Okay, let me share my screen. I believe somebody has to give me the control to share the screen. Somebody has to make me a presenter.
Yeah, Shyam, could you please make him as a host,
Yeah, yeah, sorry. Okay.
please?
Yeah, thank you. So please let me know if my screen is visible.
Yes, it is visible now.
Okay. All right. So we will start first with insurance itself. Okay. So what actually is insurance? According to what is the general idea of insurance? Okay. Let me pick someone. Stella, you said you saw some videos, right? So what is your general view about insurance? Am I
Yeah,
audible?
whenever we had some accident, we look for the insurance. Like
Mm-hmm.
we are, mhm. Whenever
Okay.
something happened, anything happened, like a very danger. I mean, like a very when we lost the um, what we say. I'm not getting the terminology, but yeah.
Yeah. Okay. So can I say like if there is a risk that is not I'm not aware of and I am being covered for that. So for that I need insurance. So there is some uncertain risk, an unpredictable risk that we can foresee but we cannot predict it. And to cover that, we take insurance. Will that term fit it? Will that term fit
To
the
recover
definition?
your losses, to recover your
Yes.
losses,
Yeah,
you need insurance,
yeah.
right? Okay.
So in basic terminology, yeah, somebody was saying something, please.
No, no. That's what I just concluded. You
Hmm.
want to recover your losses.
Hmm.
Accidentally happens anything. So we can say this is we
Yeah,
are going with insurances. Yeah.
yeah, exactly. Accidentally. So that term is important because it is something that we will not do unknowingly, but
Correct.
that can happen. There are chances that that can happen. So we can foresee that, but we can't predict it.
Correct.
So that is called risk. because there is a risk of losing something, right?
Yeah.
So insurance is nothing but transfer of that risk from one party to other party. Okay.
Mhm.
Now, when I say from one party to other party, in insurance, the party which is getting insured is called the insured, and the party which will insure it, that will be called the insurer.
Yeah.
Okay. So insurance is a contract of transfer of risk between the insurer and the insured. Make sense?
Yes.
Okay. Am I audible?
Yes, you are audible.
Yeah. So what I said, does that make sense?
Yes.
Hmm. I will be like interrupting in the middle. I'll be expecting answers. Please answer. Okay. Like it feels like, yeah, I believe in interactive sessions. Okay.
Yep.
All right. So that's about insurance. Insurance is the transfer of risk from between, is a contract where there is a transfer of risk between two parties, the insured and the insurer. Now, these are the terms that we will be like using very regularly. That's the reason we have added these terms. So risk. So risk is that what you say your loss. Well, for loss we have a different thing in insurance. So risk is actually the thing for which you will take the coverage, for which you will be covered. Okay. It can be for anything. It can be for let's say some uncertain disease. It can be even for life. It can be for a vehicle. It can be for a house. It even can be for a property, and it can even be for your intangible properties. That properties like that we can't see. Suppose we somebody is taking a worker compensation insurance, so that is to protect the company from the violations and acts committed by the employees, or to protect the employees to against the violations committed against them. Okay, so the risk can be anything, and to cover that risk we take insurance. Okay, I hope what insurance and risk are, that is pretty clear now, because these two terms we will be using, risk we will be using very regularly. Okay, now comes your premium. So can anybody tell me what premium is? I think you must have been coming across this term regularly, a lot of time. Can anybody tell me what is premium?
Pay some amount
Monthly.
to insurer periodically.
Hmm.
Correct.
Okay.
So we pay few some of the amount every month in the form of
Hmm.
premium to cover our risks.
Okay.
So
Hmm.
this is okay. Yeah.
All right. Now, I told insurance is a contract where we transfer the risk, right? So your risk is covered. So whatever your risk is, there will be a coverage. Okay, let me simplify this. You have taken a homeowner's policy. Okay,
Mhm.
a homeowner's policy is where your home is covered. You are taking insurance for your home. All right.
Yes.
Now, so there will be a law. Your major risk is your building itself, the or the home you are living in. So any damage that comes to the building, that will be covered. So your major risk is building. You are covering your building. Now, building can be harmed in a lot of ways. Uh, there can be some kind of a short circuit, and it can catch a fire. Okay, there can be some burglary, some a thief can damage something. Okay, so these are different type of risks that are involved. Different type of what can
Flood.
I say? Different type of yeah, different type of risk that can happen to the building. Now, for each and different type of these risks, you will be having different type of coverages. Okay.
Mm.
So let's say your natural calamity or something that has happened. Due to that, you will take one coverage. For earthquake, you will be taking one coverage. For burglary, you will be taking one coverage. And for your uh, sh- any damage or something that you will be taking some coverage. So all these coverages, according to these coverages, your premium will be decided. Now let's say I have taken a homeowner's policy and my house is 10 years old. Okay. Now someone else beside my house, my neighbor, he also took a homeowner policy. All right. But my neighbor, the house has been constructed just
Okay.
last year. So who do you think is going to pay more premium? Me or my neighbor?
Whose house is old, he is going to pay more because he have many risk because the building is old.
Yeah. So I am in the older building, my neighbor is in the new building. Yeah.
Correct.
Who will be paying the more premium?
You will pay more because your building is
I
old
will
one.
pay more. Exactly. Why? Because my house is old. So the whenever you will take a homeowner's policy, there will be an option of providing the year that your house was built. So based on that, your a factor is applied. Okay.
Correct.
And that factor will determine your premium. So
Yes.
based on that, since my house is older, so the factor will increase and I will have to pay more than my neighbor. Okay. So premium is basically the amount we pay for the coverages we take to cover our risks. Okay.
Yeah. Got it.
A simple term. And in when we will cover rating, we will know the type of premiums that we pay. Okay. All right. Now let's come to policy. So this term, like this is very common in India also. Policy. So, as I said, insurance is nothing but a contract between two parties where we transfer the risk. So that contract name is policy because whenever you will be like, let's say, an insured is taking an insurance from any insurance company, so they will first say they will be having a policy, right? So the contract that I was talking about, that contract itself is policy, where your insurer will insure the insured uh, the property of the insurer or anything. In that case, the insured will be covered, but there will be a certain terms and conditions. So, like in each and every contract, we have some terms and conditions, right? So, all those terms and conditions and everything will be mentioned in the policy. Okay. So, when we were defining insurance, we said the contract is binding your insured and the insurer, and the risk is being transferred. So, that contract itself is policy. Okay. So, whatever
Okay.
we have discussed, any confusion, if anybody has, please let me know. Okay, I'll take that as a no. All right, let's go to claims then. Claim. So, you have taken a policy and you have, let's say, you have incurred a loss. Okay, now since you have taken the insurance for that, your loss is already covered by the insurance company. So, you will have to report that. Okay, you will be reporting that to your insurance company. After that, after the verification of that, insurance company will verify and the insurance company will pay you whatever amount like it was discussed in your contract. So that amount will be the claim amount. Since you have paid the premium for your policy, now you can claim your insurance. Okay. So once you once you file put a report to go and put the report, to your insurance company. That will be called the FNOL, or first notice of loss. That will be the first time you have reported your damage or your loss, and it will go to the insurance company. Now the process is, the insurance company will first check, and they will review your policy, and they will review your notice, whatever you have sent them. They will verify, and once everything is settled, they will provide you your claim amount. Okay, so that is the whole process of claims. So claim is like when you request your insurance company to pay for your losses. Okay. Any confusion, any doubt? Okay, let's move. Okay, shared loss, replacement value, deductible, policyholder. Okay, these things we will be covering later on. Now, yeah. So here we have types of insurance. So there they have given automobile, property, health, disability, and life. Now, since we will be training on Duck Creek deals with only property and casualty. Okay, property and casualty insurance.
Property and
Now, property.
casualty. See, I had a question actually. So
Yeah,
property and
yes, go
casualty,
ahead.
right? So these
Hmm.
types of insurances will comes under PNC or not?
Yeah,
Whatever we are
automobile will come
seeing
under
here.
PNC. Automobile will come
Okay.
under PNC. Property will come under PNC. Your disability, actually, disability depends. Like if it is based on your commercial or personal lines, and you have taken the liability for it, then it will be covered. But health and life,
Okay.
these are not part of your
PNC. Yeah.
PNC. Yeah.
Okay. Okay. Clear. Yes.
Okay. Yeah. So in Duck Creek, we will be only covering your yeah, property and casualty insurance. Now, when I say property and casualty insurance, so it can be like let's say property can be anything. Let's say it can be your home. It can even be the building that you're using for your business, right? It can be your vehicle which you use to communicate, or it can be the vehicles which are used for your business. So to divide property and casualty, we have divided it into two particular lines of business. In fact, three. So the first one is personal lines of business, and second one is commercial lines of business. Okay. And the third one is specialty lines of business. Okay. Specialty lines of business is like where we are covering people of special professions, like doctors, or some doctors or directors and or directors and officers of some organization. So when it is involving when people of a special occupation, so it becomes specialty lines of business. And basically, what we have dealt with is mostly personal and commercial lines of business. Now, to understand our personal and commercial lines of business, personal lines is the one which involves only one in particular individual, where like let's say homeowners. So homeowners is for insuring our home. So a particular person will be insured, and his home will be the risk, and it will be covered. But when it comes to your business owners, in that case also our risk is building. But in that case, a lot of other things are involved. So building can be of any type, and there will be a lot of other businesses involved. So there will be a lot of people who will be affected by that business, the stakeholders, and some other people who are taking interest in that business. So they are called additional interest. So they will also be covered. Along with that, if anybody is affected by that business, now let's say somebody is having a restaurant, and if somebody took the food from that restaurant, and that person he felt ill, or something happened to him, and he sued that particular restaurant that due to your food, this has happened to me. So in that case also, if that particular coverage has been taken, so that insurance company is liable to pay for that particular damage that has been and that has happened to that person. Okay. So comes in a like a very layman term, I can say personal lines of business, they affect only an individual, but commercial lines of business, that is taken for an entire organization. Okay. Any doubt?
No.
Okay. Okay. Now, I think this is regarding general insurance, so I will not be using this one anymore. Okay. So when we say insurance, so in every insurance company there will be these three modules that will be served. The first one is the policy center, second one is the billing center, and third one is the claim center. Okay. And no matter whichsoever tool we are using, will it be Duck Creek, Guidewire, Chameleon, or InsureSoft, anyone. So these three systems will be present over there because the entire insurance revolves around these three systems. Okay, policy, billing, and claims. Now, so in policy will be involving something. There are some modules that policy will be involved in. So the first one is when we go let's say I want to have a policy. So first of all, I'll go to the insurance company and I'll fill the details, right? I'll fill the details or I'll go through and I'll do it through agent. And the agent will do the same for me. The agent will take my details and I will fill the details. Okay. So that part is called the interview. So in that case, they will take all the details, the name, the address, and what is the risk, what all coverages we want to take, all these things. So once we have done that interview, or we can say it court. So till that point, our policy is in at the court state. Okay, nothing has been fixed yet. It is temporary. The interview is going on, so it is in the court state. Now, after that, once we have taken and we have decided and we have given them everything. So in this particular quote, what it will involve? It will involve our details, and after that, what all coverages that we want to take. Along with the coverages will come the limit and the deductibles. Okay. So what is a limit? So limit is the maximum amount that can be covered. Okay. So let's say I have taken a policy and my building I have insured and the limit of my building is let's say 20 lakhs. So if the damage has occurred and the damage is more than 20 lakhs, the insurance company will only cover till that maximum limit that you have taken. Okay, clear? The insurance company will not exceed that particular limit that you have taken for insurance. Am I making sense? Am I audible, guys?
Maharana, could you repeat this one? Actually, I got another call, so I didn't listen this.
Okay, okay. So you see what I was saying. Whenever there will be a coverage involved, whenever you are covering yourself, so in that case, you will have to provide two things. One is your limit, and another is your deductible.
Okay.
Okay. So what is limit? Limit is the maximum amount for which the insurance will cover you. So as I gave an example, if you have insured your home and your building limit is let's say 20 lakhs. So if your losses are more than 20 lakhs, more than 20 lakhs, the amount which is greater than 20, that will not be covered. Only the insurance company will cover till 20 lakhs. Okay. Any loss more than that, you will have to give from your own pocket because the limit was that, and for that limit, you have paid the premium. So the
Okay.
limit of
Okay.
insurance is very important here. Any doubt?
No doubt. No doubt. Thanks.
Okay, then. So limit of insurance, it is clear, right? What is the limit? Everyone is it is clear, right? Limit is clear.
Yes. Yes.
Okay,
Yes.
okay. Now, there is another thing called deductible. Now, deductible is something that the insured can pay from their pocket. Now, let's say I have taken as I said, I have taken homeowners policy and my building limit is 20 lakhs. Now, I have taken a deductible of 10,000. Okay. So that means if there is any loss and it is 10,000 or less than 10,000, I can pay it from my own pocket. I will not go and claim it to the insurance. Okay. So any losses that are less than that particular deductible, that the insurance company will not bear. That you will bear on yourself. You will bear by yourself. Okay. Any doubts here? Okay. Now the question arises that if for deductible the insured has to pay from their own pocket, why they will take it, isn't it? Because like higher the amount of deductible, the greater becomes the deductible factor, and the greater is the deductible factor, less will be your premium. So that's the reason deductible is provided. So if somebody is taking a very high deductible for the coverage, the premium will be considerably low. Okay, clear?
Yeah, just
Yes.
repeat it one more time.
Yeah. So as I said, deductible is something that the insured will bear from like bear on his own, right?
Yes.
Will not, the insurance company will not pay. Now the
Mm.
question is why will somebody opt for it? Now the reason behind it is like let's say you will be having options. You will be having an option of selecting the deductible from 1,000 to 10,000. Let's take an example. So let's say you have taken your deductible as 10,000. Okay. So in that case, the premium for that coverage will be low. But let's say you have taken your deductible as 1,000. So in that case, the premium for that coverage will be higher. So more the deductible is taken by the insured, less will be the premium.
Right.
Is it clear now?
Yes.
Yeah. Okay. So we were talking about our interview and we were talking about our quote. Yeah. So when this particular thing is being going on with, if you are filing it on your own or your agent is filing it for you. So in that case, yeah, in that case, the policy is in court state. Nothing has been done yet. Okay. So your agent first, the agent will take all the details from you, and after that they will fill up the limits and the deductibles for all the coverages. Okay. Now, after all the limits and deductibles and everything has been set, what all coverages you will take, what will be the limit and what will be the deductible, and everything has been done. All the rules and everything has been done. Now comes the rating. Since we have given them every details, everything, so after that the rating will come into the picture. Now everything will be rated, and based on that, our premiums will be calculated. Okay. Our premiums are calculated, and you will verify. So the overall premium for your the premiums will come for each and every coverage, and they will sum up, and the entire your policy premium or the quote premium will be calculated, and it will appear on the screen. Okay. Now, if you are satisfied, if the insured is satisfied, at that after that, the agent will bind or book the policy.
So just want to check one query. How are the policy being rated?
Okay. Yeah. So as I said, based on our limits and deductibles. So in the rating, let's say I have given all the details. I have given
Mm,
so that there will not only be one coverage for
mm,
there will be a lot of other coverages involved. Okay. And
right.
for all the coverages, the rating will be calculated. And at that point, there will be a lot of factors involved. There will be a lot of rules involved. Now, rules in the
Mm,
sense it will be involved based on the place you are staying. There will be a lot of state exceptions. There will be a lot of
mm,
state guidelines, and there will be a lot
okay.
of ISO rules. There will be a lot of
Mm,
rules applied by the actuaries
mhm.
based on that insurance company. So everything will be applied. All those rules will be applied, and based on that, our premium will be calculated. So that's how rating will be called here.
Okay.
And once the rating is called, after that, our premiums will display. And based on that premiums and everything, so the insured will have to make sure if that is what he wants. So at that point, the insurer can go to the agent, and the agent can bind or book it.
Okay.
So once it is bind or booked, at that point also, our quote has not converted into policy yet. At that point, it will go to our underwriter. It will go to our underwriter, and after that, underwriter will verify based on all the underwriting rules, everything. The underwriter will verify, and the underwriter can even make some changes, make some amendments. Okay, underwriter can make some amendments, and that can be applied. So from here, actually, two things can happen when it goes to the underwriter. Either the underwriter can accept it, and it will move forward, and it will be issued, or else it will be rejected. And once it is rejected, your policy will decline. So that will not come into effect. Now, if the insured wants to have another issue another policy, so the insurer will have to go from step one. Insurer will have to create a new quote if the underwriter rejects it. Okay. Now, so if it is rejected, that means it is declined. Okay. And if it is accepted, that means it will be issued. So if the underwriter accepts it, this will be issued. If the underwriter rejects it, this will be declined. And if it has been issued, then only your status of your quote will change to policy. Or committed. Okay. Once it is in committed, that means once it is committed, that means it is now in policy state. Now your policy is committed. It is with the insurance policy. The contract has been issued. Okay. So this is the entire process for issuance of a policy. So first it will be interviewed or it will be in the court status. Court will be created. Then the rating will be done. After the rating is done, you will under this agent will bind a book it. After that, I think I missed one thing. It will be referred. After that, this particular thing, the booked or bind a quote that will be referred to your underwriter. Underwriter will either accept it or reject it. If rejected, that will decline there itself. If accepted, it will be issued and your policy will be in committed state. So till this process, anybody has any confusion, any doubt, please tell me.
No.
No.
No doubts? Okay. So this was the journey of from code till our policy. Okay. Now, the moment our policy is issued, that means the contract is set between the insurer and the insured. Okay. Now, since you have committed your policy, you will have to pay the premium whatever has generated. Now, for managing that particular premium, this particular thing will flow from policy to billing. So payment will have to be made, right? Premium appears. Now we are making our payment. We have made the payment. Okay. So here it will go to your billing center now. And your money will, how that money will be managed, that will be decided here in the billing center. Now, since I have taken a policy, now I can decide how want to pay it, right? And when I want the billing cycle to be. Let's say I have issued my policy on first, and I want it on a monthly frequency. I want to pay my premium on monthly basis, and I want my billing cycle to be the first of every month. Okay, so that thing will be managed by this billing center itself. Okay. uh, Any confusion here? This part will be a little tricky. So let's say I have taken my policy from 1st Jan 2023 to 31st December 2024. So I have taken a policy for a year. Okay. And I want to bill it monthly basis. So there will be 12 installments that I have to pay, right? So that I will decide before issuing the policy. So there will be one page inside this policy, like while we will be not inside the policy center, but that there will be a page while we are issuing before issuing the policy. These things are decided, like when it will be, on which date the billing cycle will be, and what will be the billing type, what will be the account plan, and what will be your policy plan. Okay, how your installments are going to be. So that will be decided. And once the policy is issued, so after that, the entire thing flows to billing. Okay. And in billing, everything is managed. So for that, we have to integrate our billing and our policy center. Okay. So there will be an integration between these two. Any doubt, any confusion that you are having, please tell me. I know this is a tricky thing. Okay, no doubts? Confirmed? Shall we proceed? Okay, I'll take that as a no. Now, once you have issued your policy, guys, I'm audible, right?
Yes.
Yes, you are audible. Yeah.
Yeah. Am I going too fast?
No.
No.
Just tell me, okay? If I'm going too fast, we'll go slow. Okay. So, I have issued my policy. Now, the premium information has to go to billing. Okay.
Mm.
Now, as I said, for just for an example, I will give you, like we are taking this monthly thing. Okay. Okay. Let's say I have issued the policy and the annual premium is $1,200. Okay. And my frequency or the installment, my installment frequency is monthly. Okay. Billing date is first of every month. Okay. Now I have issued the policy. So the first installment will be paid there itself. Okay. Yeah. Now installment date is first. Now let's say 1/1/2021. Sorry, 2023. Okay. And The amount that has been paid, let's say, is $100. Okay, sorry. Yeah, the amount is going to be $100. Okay, and I have made a payment of $100. Now my balance is going to be
Yep.
$1,100. Correct? Annual premium was 1200, 1200, and I have taken it on a monthly basis. So first installment date, I paid the premium, I issued the policy, and this is the balance. Now, ideally, this does not happen. There is a service charge also involved. So that service charge, that is based on every carrier, every insurance company actually. So for some it is five, for some it is $10. So here I have not neglected it. I have neglected it just for the sake of understanding. Okay. Now, so this is the payment made and this is the balance. Okay. Now let's say if your second Feb, so at that point your installment amount is 100, but there what you did, you decided to make a payment of $300, let's say. Okay. Now, what is going to be your premium? Your balance? Balance is going to be $800.
800.
Now, this is the thing, how we actually want to distribute this premium, that extra premium that we have given here, how we actually want to distribute it. So there are two ways of doing that. Okay. One is catch and another is spread. So what happens in catch, I have like given $300. So the subsequent three, yeah. So what it will do is subsequent installments, it will make zero. Okay. It will be zero. This will be zero. And this will be again 100. So this is catch. Okay. So if it is catch, it will pay for these two terms and the next term will go the way it was going on. But in case you have taken a spread, in that case, it will divide it equally among all the subsequent transactions left. Okay. So here, actually, you have what you have paid. You have paid $300. Amount was $100. $100 will be paid here. Remaining $200 that will be equally distributed among the remaining balance.
Mm.
Okay. So after that, what it will do is it will equally divide that $200. Like now, your particular this is $800, and the number of installments left.
Yeah.
Sorry, $800, and the number of installments that are left is 10. So this is going to be 80. This is going to be 80, and this is also going to be 80. Okay. So it has divided this particular premium along all the subsequent transactions equally. Now the premium amount for all the subsequent transactions that will be reduced. So that is spread. And the previous one, what we did, that was catch. Okay. Any doubt here? Like between these two, catch and spread? Anybody didn't get this catch and spread concept?
So this is also chosen by the customer, or this is company specific?
This is actually chosen by the company.
Okay.
Okay.
So customer has
So
no say on.
yeah. So this will be actually like a part of company itself, insurance company itself. Like the premium will be paid by the insured, but how
Hmm.
the premium will be paid and how it will be managed, that will be
Hmm.
decided by the insurance company.
Okay.
And this is how and it can also be modified actually. In Duck
Hmm.
Creek, this is the base implementation that Duck Creek provides. We can choose out of these two. But let's say any customer they wants to make some further modifications. So in that case, they can also do that.
Hmm. Okay.
This is the base behavior of Duck Creek, how billing is handled.
Okay.
Okay. So anybody, any confusion here? Please let me know. Okay. So we'll proceed then. All right. So this was about how the billing is done according to the frequency. Now, as I said, so this part is clear, right? From court to our policy is issued. Now, policy is issued. That's true. Okay. Now let's come back to our policy a little bit. So I issued my policy. Let's say this was the date my policy was issued. Okay. And the premium was $1,200. Okay. Now policy is issued, but that doesn't mean that we can't do any further changes here. Let's say I have taken my policy, and after 2 months I realized that yeah, there is one coverage that I have to add, and I forgot. So will I be able to do that? Okay. So yeah, there is a provision. So what we can do is we can initiate an endorse transaction. Endorse transaction, or in some places it is called midterm amendment. Okay. Endorse transaction or midterm amendment transaction, both are similar things. So as the name suggests, there will be some changes that we will be doing. Okay. So sorry, 312023. I had decided to do an endorsement and I took some coverages and it increased my premium by $1,000. Okay. Now the like premium increase or change premium here is $1,000. Okay. Now this $1,000 that is calculated for the remaining term. That will never be calculated for the entire 12 months. Sorry, for the entire 12 months. So I have taken it on 3/1. That means of March 1st. So there are 10 more months remaining. Now for the 10 more months, this $1,000 has been calculated. Okay. So whatever premium is being calculated or whatever premium you have to pay actually, that is called the written premium. Okay. And whatever you are charged for it is called the charge or the change premium. Okay. So return premium and your change premium. Any doubt here?
No.
Uh, Any questions between like if somebody has not understood the return premium and this change premium? Any doubts here? Okay. Now, sorry. Yeah. Now this particular premium, $1,200. This was on the prior transaction, right? This particular premium was on the newer transaction. So this particular premium will be called as prior premium. So on your prior subsequent transaction, whatever was the return premium will become your prior premium. Okay. This will be the prior premium. Prior premium for this particular transaction. So since this was the first transaction, just remember every first transaction that is committed, that is called new business. Okay. Whenever you are issuing a policy, that particular transaction will be called new business. And any amendments that you are making on your policy, they will be called endorsed transaction. Okay. Any confusion, anything that you're not getting, please ask me. Because these terms we will be using very frequently in our later sessions. Am I audible? Hello?
Yes, yes, you are.
Or like, is it sleep time for everyone?
No, it was clear.
It was clear, right?
Yes.
Yeah.
Okay. Okay. I think that is much information for today. I think we will be wrapping it down today here itself. So tomorrow we will be going on with a, so this was something that I discussed for policy. This was related to policy life cycle also. This is how the policy life cycle is, but it is not complete. Tomorrow we will go through the policy life cycle completely. Along with it, we will discuss all the policy level transactions that we have. Okay.
Maharana.